Good morning, everybody. Welcome to the Flow Show. It's Hump Day, Wednesday, and we're ticking along nicely. Good morning, K-Man. How are you doing, sir?
Good morning, Ryan. Good morning, everybody. I'm doing well, thank you. I'm just watching an FX market that is at a complete standstill. So we are spectators of what's going on in the crypto sphere and what's going on in the equity markets, right? FX has stopped having a life of its own for now, by the looks of things.
Yeah, it feels like when I used to go fishing. I used to sit there and not getting a bite all day and just nothing happening. But you've got to keep your rod in the water in case you miss something. But yeah, there's still moves to be had. We had plenty of vol yesterday, but then we get these quiet periods where not a lot happens and we all got to sit picking our noses. But anyway, we get set up for what way may be if nothing's happening at the moment. Right, let's start with those good old folks over in Japan. More sources, stories coming out, but the market is now pretty numb to them. One source's piece says the BOJ likely to move slowly on raising rates, even if it ends negative rate policy. That's what we've already known. We've already said it here. Bit of a new one said they potentially looking at ending all ETF buying if the price goal is in sight. But they are likely to keep buying bonds to keep the market stable. The ETF news, they haven't bought anything this year on the ETF front, and they were net sellers last year. Their unwritten rule is that they only really step in if the top X has lost something like 2% before midday or something like that. That was their unannounced condition, or how they used to do it. So ending it isn't really a big deal because they haven't been doing it anyway while markets have been going up. But it's still just another confirmation that they are potentially going to stop a lot of these policies, YCC, ETF buying, as they move towards normalization. Right, wages front. The headlines have been dropping in. Nippon Steel, they're going to raise wages by more than 30,000 yen. That's higher than what was demanded by the unions. Toyota is going to meet the union demands for hikes in full, taking this hike to the highest since 1999. Nissan Motors, they're going to agree the hike in full. Akuma Corporation is going to hike the monthly wage by 15,000, just under 16,000 yen, which was less than the 18,000 wanted by the union. So that may still go for further discussion if not agreed. GS Yuasa agrees to demands in full. Mitsubishi Heavy Industries agrees to an 18,000 base pay increase. Japan's JM union reaches a 5.32% pay deal. Panasonic agreed in full. Hitachi agreed in full. That hike, the highest since 1998. So it's all coming to pass now. But again, these are a lot of big companies. And it's really the smaller ones that need to play ball as well. Japan's business lobby, Kandaren, says that the wage increases indicated in preliminary surveys of big firms are likely to exceed levels seen last year. I would suggest at this point the box is ticked in part for the wage hikes for the BOJ, but again, they need to see these SMEs coming up with similar as well. BOJ's Ueda has been speaking as well, saying that they're going to think about policy adjustment once the price target is in sight. Spring wage talks are an important point to monitor. Unions have demanded higher pay, and we are seeing many corporate management making offers that will stream in today and beyond. So it's all about future. These wage hikes are all well and good this year, but they need to continue. That's what the government will want, that next year we get good pay hikes. Maybe not busting the levels we've seen this year, but they'll want to see them elevated anyway. But for the BOJ, we have to remember it's not all about wages. As important as all this is just one of their pillars for the bank before they start ending. Inflation, the economy are the other two pillars they need to keep an eye on. Kate, what are you making of it? These this wage stuff now, market pretty much set on what it's getting from that, I think.
Yeah, yeah. I think if you look at all the details that we already had, we're still waiting for Ringo, but it all looks to be quite promising, right? Already rumors going around that the smaller and the restaurants and stuff are still finding it difficult to keep or get staff. So that may be a hint at those smaller businesses also following suit. So that condition seems to be there now. That part of the equation. Yeah, I've seen a lot of people now really putting March on the table for the moves. But there's going to be a few details to be negotiated there. I reckon not only taking rates out possibly to zero, but I've even seen some hints that they may take it straight to 0.1 BP, which would be 0.1%, which would be a 20 BPs increase. But then there's also the YCC. I think that's rather a technical issue, whether they want to just get rid of it, put it in the toolbox. I reckon second would be rather plausible. And then there's the JGB buying. That is going to be the other one. There's X amount rolling off or maturing every year. So if they match that, then the net balance sheet is going to remain at lofty levels where it is right now. But we will see about that. But yeah, on the wages front, it seems that condition is now in place, right?
Yeah, and for JGBs, I can't see them actually actively undertaking QT and selling out their holdings. It's more likely they're just going to let them roll, won't they?
Yeah.
Rather than reinvesting like the ECB.
Yeah. They will probably stick a number to it. We already had a hint that they would continue to buy 6 trillion also JGBs per month, which well, that's not a hint. That's the expectation as well, and that would coincide roughly to what's maturing per year. So that would keep the balance sheet stable.
Yeah, cool. Thank you. Kishida has been speaking as well, saying that Japan has not yet emerged out of deflation, so not willing to take that step just yet. One of his advisors, Yata, said that wage hikes this year are likely to exceed last year's. We must continue pay rises next year and thereafter to defeat deflation. Again, going on that line, that it's not just about this year, it's about going forward as well. It says it must broaden pay hikes to workers nationwide in every prefecture. Over at the Bank of England, Bailey was out saying that officials are looking at how restrictive rates are and for how long they are needed. The question is what it will take to keep inflation at 2%. I can tell him right now, it's nothing that they'll do that will keep inflation there. No matter what central banks like to tell us, they have as much good in keeping inflation at a particular level as controlling the tides of the sea. Anyway, UK GDP came out as expected this morning. So there is that green shoots, as people like to call it. January monthly CPI coming in at 0.2 as expected. Year on year down 0.3 as expected. For the rest of it, a few bits and bobs. We had industrial production, manufacturing production. Industrial production was up, but not as much as expected year on year. Missing on the month, down 0.2%, so a bit soggy there. Manufacturing came in flat there as expected year on year, and that 3-month rolling GDP as expected minus 0.1%. So industrial production, not overly good, but there or thereabouts. All 0 points, this flats. We're not going to see much more than 0 point anything, I don't think, for the foreseeable future. But GDP maybe turning the corner ever so slightly. The market doesn't know, or the experts, the banks, haven't got a clue what's happening with BOE rates. Yesterday, UBS moved from May to August. Morgan Stanley reiterated their May call, saying it's severely underpriced. Citigroup have gone from August to June. So they're all over the shop, these lot. No one has a clue. I would still say that June cut from the Bank of England is a remote possibility, given the stickiness we're still seeing in wages and even inflation in part. So I think, if anything, my rough baseline is probably August, if the data conforms to that. Bank of Spain, they're sounding very bullish. They hiked their 2024 growth forecast to 1.9% from 1.6% in their prior forecast. So Bank of Spain thinking that things are looking good for them in 2024. They see 1.9% in 2025, 1.7% in 2026. More messing around with ECB heads as well. ECB Holtzman, one of the big hawks, says a rate cut is more likely in June than April, but says we have been misled by projections before, so should stay data dependent. Here's a line. It says cutting. No one's dependent on the Fed, by the way. But he says cutting before the Fed is not without risk. Then ECB's Villeroy went the other way and says we can cut rates independently of Fed policy. So again, differences in opinion, let's call it that. He's been even more all over the place. He's been one of the first touters of possibly going in April. And he said last night, the ECB is in broad agreement to lower rates in the spring. Then said again, the spring rate cut remains probable. That was yesterday's comment. And then today he said it's more likely to cut rates in June than April. He must have got a phone call from Lagarde in between those two speeches. You may remember we had the sources piece on Friday saying that maybe some of the hawks had offered a concession to the doves by saying if they pull their calls for an April rate cut, they'll give them an additional one in July on top of the June one. It looks like Villeroy might have been the person who was pumping for April, and now he's been switched to June. So anyway, they're all over the place. ECB's Wunsch, ECB can act before wage inflation drops to 3%. Sees a cautious ECB move because of high services and wage inflation. The ECB should make a bet on an interest rate cut before so long. Another hawk, ECB's Kestrel Kazaks, says the rate cut decision will come in the next few meetings, and there is no need to delay the ECB rate reduction too much. As Mark in our room correctly pointed out, that gives some traders perhaps the opportunity to price in April cuts again. But he is one of the big hawks, so it is a bit of a change. But I can't see him personally voting for an April cut. But you never know with these lot. They're all over the place, as said. Okay, are we cutting in April, cutting in May, cutting in June, cutting in July? When's the ECB going to cut?
In 2024. What else can we say? It's still, I think you and I, and we've been talking about that already in length. June is cut month, I reckon. Whether or not they will, they are Fed dependent or not, they certainly are. But we do have to note, and I'm just taking my sheet to confirm that the June meeting of the ECB is before the Fed. So there is still a little bit of uncertainty there, but I reckon it's June. It's going to take quite negative data to cut in when is it? In April, right? It's going to take very negative data. But nothing is impossible in this market. So yeah, my base case is still for June. That is they all cut in June. Well, and perhaps BOE may just be tempted to just join the global cutting fair in June. You know, that's still to be decided. We are still about 3 months away from that, right?
Yeah.
They are and they are after the Fed and the ECB. So there may be a bit of an, I'm not going to say excuse, but let's say a bit of an alignment also coming. That it is possible, right? It is possible. So
Yeah.
just to not to hurt the economy for too long when the others will be cutting already. And
Yeah.
yeah, come again.
Yeah, so I was just going to say, in the ECB, I think maybe there's a bit of a growing risk, a dovish risk, if they cut in June, that they then indicate a July cut or a quick cut thereafter, rather than
Mm,
a slow and steady and wait for each set of forecasts.
yeah.
They have said they won't necessarily cut at consecutive meetings, but if they have made concessions to the April squad,
Mm,
maybe that might be a little dovish slant if they cut in June and say we might have another one in July.
mm,
I'm not sure that too many in the market would expect that outcome at the moment. So
yeah.
that's just maybe a little growing risk that we need to keep an eye on. But obviously, as you say, we've got months till we get there yet. So let's get through March first and then see what happens.
Mm. I think you know April. If we don't get April or so, it's it's going to, the data are going to get increasingly important from now, right? We've been saying that we're all data dependent. We are obviously all data dependent. They are, but it's going to get increasingly influential on the expectations and what they may do. You know, if growth in the eurozone remains anemic, it's possible that Lagarde says, well, enough is enough. Now we have to go and support stuff a bit here.
Yeah, exactly. And that data has to support them cutting as well. You know, if inflation isn't coming down, if it's turned back up again and the economy is dropping, that puts them in the usual between a rock and a hard place, as they like to get themselves into. But yeah, we're all data dependent, and data is what we'll be watching. And on the data, we were watching the US CPI yesterday, which again is coming in sticky. Headline CPI actually rose to 3.2%, was expected in unchanged. The core did come down a pip, but was expected to come down 2 pips. And here we are again seeing positive numbers on the month as well. So more stickiness. And there's a slight bit of divergence here between what CPI is doing and what the PC is doing. The propeller heads went into overdrive yesterday on it all this shelter, rent, core, super core, all this stuff. So it was a bit of messy. All I do is take the simple road. These year-on-year numbers are sticky. They're still going sideways rather than really coming down significantly, particularly headline CPI. Core is still creeping down, but headline CPI is pretty much going sideways and has been since June last year. So, you know, that's more than a trend at the moment of not seeing CPI coming down significantly. So very sticky there. Bit of a strange reaction though in the dollar yesterday. It went as I thought it might go when we were talking on F.A.C.E, get a dollar rally, and then it will get whacked. We got a dollar rally. It got whacked within about 5 nanoseconds after we busted into 148, dumped all the way off, and then came all the way back again. What does that tell us, Kay, regarding how things are priced? The market didn't really change expectations for the Fed about June. Was that the reason? Quick algo fest and then back to the path?
Yeah, I guess so. I it's the reaction was sort of as expected. A bit higher dollar, perhaps the dollar yen is because of today's move, not the best one to look at, but euro dollar, Aussie dollar, and stuff. Yeah, it was as expected. Move to the one side, then move to the other side, and then come back in the and then come back in the middle. I am though a little surprised, a little, not overly, because we still have to look at those option vols, which just price in one event risk and then they come crashing down again. And that, I think the option market has the sorry, most of the FX pairs firmly in its grip right now. And the reason for that is it's getting cheap to buy options, but that means that we have to expect smaller ranges as well, and people will be sitting on the edges of the ranges, and that's exactly again what happened yesterday. If I look at, and I was in a small Aussie dollar, for instance. If I look at the Aussie dollar, we went down to below the figure, then up to 40, and now we are roughly back to where we were right before the CPI, and that's true for most of it. Cable is about the same. I am, though, a little surprised that the market, looking at what yields have done in the US, that the market has not bought more dollars because of the stickiness, because of the still yield differentials. Of course, yield differentials are not everything, that's for sure. But I'm a little surprised on that. Equity markets also roared completely back up, but I would argue, and we've been saying that for quite a while now, that equity markets live a life on their own, just the same as crypto, for instance. They are living their own life right now. I think that still has to do with liquidity in the system and stuff, rather than really one CPI data. But I do am a little surprised that the dollar is not a bit more beat than it is walking in today.
Yeah, I think I'm wondering if it's just a bit more of a risk play, out of bonds into stocks rather than yields going up because the data was potentially hawkish. It didn't change the needle for June cuts. It doesn't seem like anything's going to change the needle for June cuts for the Fed, even if unless inflation really does start kicking up. So yeah, maybe people are just going for yield, getting out of bonds into stocks, because you can't keep the stock market down for 5 minutes.
No.
So yeah, maybe it's just as I said, a risk play or
there
something.
is this story about rebalancing, and if you look at it may also be a fact that if everything is so moving in lockstep, because the differentials aren't moving that much. It's also possible that there's been a little bit of rebalancing from US into Europe as well. For instance, there's a lot, probably a lot going on behind the scenes, stuff that we can't see. But if you look at flows in the FX market, they are very much contained, right? Very, very, very much contained. It's not a trendy market by any means. It's a market that is looking for clues. And perhaps, and I don't want to be too downbeat, but I've said it. If they will only cut in June and we get lukewarm data, not really the data not going for anything spectacular, we may be here. We may be going into the ECB meeting in June at 109.30 euro.
Yeah, exactly. Blimey, I've just seen the vols. Euro dollar 1 month 5.1%.
Exactly.
I mean, we're close. It got down to 5.08% this morning as the low. Cable as well, 5.59.
And look at the shorter end, the 2 weeks, the 1 week euro dollar, we are well below 5%. Well below.
Yeah,
5%.
that's getting in below 5%. We're really getting into quiet territory.
Yeah. And if you see cable in the 5% range, that's not very encouraging either. I'm actually, and that's very funny. Dollar Swiss has a higher volatility than the cable. That's spectacular. Okay.
Yeah. Even dollar yen's down today, 8.4%. It was up in the 9s earlier in the week, so that's a bit of a surprise as well, seeing that coming down. But anyway, there's going to be plenty of vol coming. It just may be sporadic. That's what you're going to have to look for. Hit those moments when you get a bit of vol, and try not to get sucked into doing something when it's low.
Yeah, low vol markets, it doesn't mean that it's not going to move. It can move, but most of the time it's probably going to, well, if you are in ranges, moves are going to be reversed and then come back to the middle of the range. But the other possibility is that you have a move during the day, or the American session also, and then you just stop again and sit there.
Yeah.
We've seen that in the past as well. I've seen that over my career. You do have a move, and then it stops, and then it sits there, and then waits for the next one. But one move and then back to low volatility. That is also possible. That's one of the possibilities.
Yeah, exactly. I think that's part of what Ali's seeing at the moment with your cable trade didn't quite get to your profit target, and now it's come back up. But we'll have a look at cable in a moment. We also had a 10-year auction yesterday, which wasn't the greatest. One could say bid to cover was down 2.51 versus 2.56 previous. There was some small upside. Domestic demand was higher. International demand, indirects was lower. Dealers took a good chunk. In normal times, that you'd probably say, "Oh, that's a really bad auction." But we're not in normal times. The Treasury are doing a flood of issuances. We've seen similar types of numbers before. So put it in the whole cooking pot. It's it's not something we haven't seen yet, but still a little bit negative on that one, Kay.
That's the thing. We've been talking about it. I've been saying like perhaps at one point it's going to be a little hard to absorb everything, but it's not a disaster either, right? That I know. I'm actually, you know what? I'm actually thinking a little bit the other side. They are not disastrous. We've seen worse than that. It's really the market still absorbs it, and that still testifies as well that there's enough liquidity in there to absorb all of it. Otherwise, we would see much worse on some of these auctions, which I was actually fearing for this month of March. Looking at what they were auctioning, that at one stage it may really have an effect on the yields.
Yeah. Right, last bit of news. I've got a bit of geopolitics. Russia's Putin has been spouting off, saying he will deploy troops and military equipment to the Finnish border after Finland enters NATO. Chucking around the nuke lines again, says we're ready to use nuclear weapons if the existence of the Russian state is threatened. And if the US conducts nuclear tests, Russia may do the same. So he's decided he wants to get on the wires again. Not real any moves in risk on the back of those comments that I've seen, but we'll keep an eye on those. Anyway, Kate, anything else? No,
we've covered it, Ryan. Move on.
Cool. Right, I'm going to jump back to dollar yen quickly, because there's one thing that's key at the moment with price action. As we said earlier, the market now becoming a bit numb to all these sources headlines, wages headlines. We're getting all this stuff that's positive, but there's only minimum moves now in yen strength. So it looks like a lot of this move is now that BOJ being priced in what's expected now. So I think from this point, barring any big news, and the Rengo stuff on Friday, as I mentioned in our chat room, might just be the icing on the cake now, rather than the whole cake itself. So it's just going to be a bit of confirmation if the details out of Rengo are positive. But we're not seeing any big moves down now in all these headlines. So that suggests the market is happy where it's at. I think we're still looking at a confirmation move, be it March or April, when the market finally gets to know that what's happening. Then we have to obviously go through the details. Are the details more dovish or a bit more hawkish than expected? But for now, it looks like we're done with headlines hitting the yen for the moment, so long as they're of the same ilk. So on that front, I'm not really interested in pissing around in the middle here, because I'm looking at the big levels. We've got this big event I think now, again, I'm moving back a bit more towards it might be a buy rumor, sell fact trade when we get it, but there's going to be some jigging around by traders, some who are expecting March, others are expecting April, depending on whether they go March or April. It still doesn't matter in the long term to me. You know, we're talking about ending decades of a mindset. You know, so 30 days isn't going to make a difference whether that ends 1 month or the next, compared to what's been happening for years and years and years. But the market is probably still going to, the algos are still going to have a fight around, short-term traders fight around. So for me, I was looking at maybe a move on the CPI data up to 148.5 for a little tap on the head, just because I still think we're in rally sell mode for the dollar. That happened. I didn't even get close to getting my finger on the button. We just popped briefly into 148. And then again, high 148s, 149s. This level here is maybe a bit of a watch area. Down below, we're holding 147 again. 146.50 showed up in all the prior news and headlines this and last week. So that's a consideration. Otherwise, I'm not interested till something down towards 145, depending on the driver. So I'm setting my stall out a bit wider for that one. Over at Cable, Ali, so you didn't quite get your 44s. You didn't get your 44s? Oh, it must have come in pretty close to that. Yeah, I'm not sure what to say about that, mate. It's bad luck. It's trader's luck. That's trading, mate. Sometimes you come in within a whisker of getting tapped out, and other times you get your level and then it carried on going through. Some you win, some you lose. It all depends on if you're in front of your screen. That's when you get to the point, well, if you don't get that initial move, do you then take a bit off in the subsequent move? As you can see, we did get a secondary move. So we had a couple of goes down here at the lows. So you might have had opportunity. If you didn't get the first one, the second one, you might have thought about taking a bit off there near your profit target. As we like to say, here's a line that you won't find in your books. Ali, don't be a dick for a tick. That's one we had on the floor. You know, if you're waiting for 44s and you see 45s, no one's going to tell you off if you take 45s. But yeah, don't be a dick for a tick. You won't see that in many books. But in the meantime, your short's still looking good, mate, because 128 is holding. That's really your level now. If you're back above there, then maybe you're going to be heading back towards your entry. But while you're below there, you have every chance of getting another move south to that. But again, I'm not seeing any reason why this goes any which way, bar what comes out of the US. Certainly the UK data hasn't done an awful lot this week for the quid. As we can see in euro sterling, we had a little knock up towards his 50s. Had a little break yesterday. Now we're back below. Now we're just mooching around. So again, we can't even get a move up to this 70s, which still keeps the 85 level well within the crosshairs. So that's one. I don't know. I'm not even going to look at what the vol is on this one, Kate. Probably 0.1% or something in euro sterling.
You know what? Surprisingly, it's still, well, it's at 3.7, okay, for the 1 month.
Yeah,
it's at 3.7 for the 1 month. But perhaps we should consider that a bit high. I'm tempted to sell.
Yeah,
but no, it's low. The threes are low. Like for instance, dollar China is also around there because the PBOC is actually below 3% right now. But that's below 3% on dollar China. Woo, maybe tempting. Yeah, that's really low. I'm going to check a few prices there, just to play some kind of surprise. But yeah, I mean euro sterling. I know you're saying 85 is still at risk. It's of course still at risk in the big picture, but I also think it's become a very, very, very good support now, and just solidifying the range, really.
Yeah,
just
very much
solidifying the range, right?
Yeah. But it still looks quite weak when we're not getting even above that 85 or 70. It just doesn't keep the wolves from
You need flows,
the
and to
stores.
have flows, you probably need an incentive. You need, of course, there's always this Brexit thing and difficulties bubbling under the surface, but that is not like creating your massive flows. You need
Yeah.
asset managers to wake up to something that they like or don't like, and then they are going to put it somewhere, or they are going to create the flows to take it in a certain direction. If you look at data right now, even the GDP data this morning, you're turning somewhere around those European levels, and so why would euro sterling really move, right?
Yeah.
Okay, I mean, sterling rates are a bit higher than the European rates, but not massively either. So that's all about. There's not much to do really, I reckon, in the euro sterling right now.
Yeah, this could be one. This could be one that might be finally up for a break if if perhaps the ECB are going to go for 2 quick cuts, and the market's not expecting that, and the Bank of England doesn't look to cut until maybe August, then you're going to get a 50 pip potential 50 pip rate divergence widening there, and
That's very
that might
possible.
be the kicker.
That is very possible. But that's still a few months away, right?
Yeah.
And I wouldn't start to, like, if you look at the option sphere, it's cheap, but then if you perhaps want to buy a 3 months break, let's say your 3 months, but you should ideally do 6 months or so. But it's all right. You pay away 40 pips for an 84. 30 or so on the euro sterling, but I would still wait for about a month or a month and a half to really do it.
Yeah, well, yeah, we could look at the data. Might be getting an inkling from the data anyway. All right, just moving on quickly. Stocks, as I said, you can't keep a good stock market down. This one keeps coming back and back and back. Now we are staying below the prior highs here. So yesterday we were talking in the room. I said if we don't get up towards these highs, sellers are probably going to come in anywhere from this to sort of 85 level. They did. We had a bit of a sell-off yesterday after we failed to make inroads up there, came down 30, 40 handles. Now we've come back up, and this price action looks like it's building for something at the moment. It doesn't mean we can't go down. It's holding below the prior high, but it just looks a bit buildy in my experience. Always looking for patterns, price action patterns, and it's the fact we've come back so quickly and we're holding up here might suggest we're on for another break up. If we do, even if we go up to test 52 and hold, it just keeps the momentum going, and that's what's important if you're on the long side like I am. Shorts again need to be careful. You can pick your moments, but you need to be quick and take your profits and then tighten your stops up to make sure you don't get caught out when you're sitting down here in a short thinking, yep, here we go, 55,000 is the next level, and then boom, you're back up through your entry and you're offside again. So this has been happening all the way through for the last 300 plus pips. So if you're short, like shorting, want to pick those tops, be nimble, take your profit, lock the rest in, lock your stops in. There's no one who should be caught 50, 80, 100 ticks offside in a market that hasn't done anything but go up for the last few months. So there's no excuses for getting caught massively offside if you're trying to short stocks at the moment. Kate, do you want to have a little wander around the charts?
Yeah. Do you mind if I take a quick look at that S&P as well? Because Angela is right on the rising wage, and there's something else as well. I'm not sure. I didn't hear whether Nick already mentioned that. I guess so. There's also the 1.272 extension of this. Which one is it again? Yeah, I think it's this one. No, the bigger one of the 2022 move back down. We are at extension point, so it's not completely a coincidence, in my opinion, that we are stalling a bit here because technicals. have actually been invented in the equity markets, because the equity markets were free to move much earlier than FX markets. If people want a very quick history update. But yeah, so they do, those FIBs do matter in the market as well. So I think it's not a coincidence that we're stalling around here a little bit. And Angela is right. Yeah, we are in this. We are still in a rising wedge. Above there, I think 5,200 is going to be just psychological. The next one I can only see up in the 5260s to be precise. I need to come back on the yen, and I'm just going to show a quick preparation perhaps for next BOJ. I've been talking about this 146 level because we had a bit of confluence there, right? It's a pretty big level, like prior lows, the 200 DMA was over there, the cloud was not too far. Now the cloud is moving up a little, and before we head into the Bank of Japan, the cloud will be around 147.5. So that is probably going to be an added level if we are above. If we are above by then, of course, that's probably going to be an added level to pay attention to when we are going to into the Bank of Japan. And then on the downside, it's probably going to be your 145.5, 146 below there still. Okay. Those are going to be very, very big levels I'm paying attention to, because any move that would, I would say, mechanically also take it into that zone, but hold, I think is going to be significant. Really, really, really significant. I am still not convinced that the yen is going to stay higher for longer. I'm still not completely in that camp. I can see that we are going to find rally sellers probably around your 148.5 or so, Ryan, or around 148.30s or so. It's likely, especially also looking at the rest of the dollars. I mean, stuff like euro, for instance, and is very resilient versus the dollar. So I would guess that perhaps we are going to find a bit rally sellers there, but for post Bank of Japan, I'm going to have a very, very close look at those levels here, where we end up if they would move, and if they don't move, I reckon we are going to go back up to above 150. That's my view. Right, today I don't have a lot to say really. I'm still a bit long, of course. My long-term silver is hanging around, being a bit of a spectator as well. But at 24 is a bit of an interesting level. I say if we get back below, we can correct a bit more, stay above. We're probably going to have a look at the 25 sooner or later, especially that the dollar doesn't really find too much of a footing right now in the market. There's a lot going on in the crosses, and one cross that is going to be interesting, or a couple of them again, are those Swiss pairs, because next week we have S&P, right? So we have seen support here around 95.75. We have seen support, and that should, in theory, be positive, because we did not make it down to the break of the trend line break around 95.5, or a little bit lower now. But I still would say roughly 95.5 or so, 40.50. We haven't made it down there. So I'm still, well, hope is not a strategy, but I'm still like targeting around this 96.75 zone in the Euro Swiss, possibly ahead of the S&P, because we could see a bit more speculation. Tomorrow we have Swiss PPI out, by the way, so that may be a bit of a driver. If that comes in lower, I guess the speculators will again get comfort on the Swiss short position. Okay, sterling Swiss in this channel, and since we broken above, if you look at this, since we broken above this trend line here, which was the prior channel, and we reversed above the cloud, it seems like the 4-hour cloud is doing a bit of a job as well. So it's roughly around the channel support as well. So I'd say watch those two things for any confirmation of any move. Top side, I reckon this little crossroad here is still a possibility around 114, but it's making a bit hard work of it. Like all the rest, it's very, very slow. Okay, Ryan, I'm giving it back to you, mate. Looking at the clock.
Yeah, thank you very much, mate. I think that'll do for today. We've not got any data out today, I don't think. Just looking at the calendar. What's it, Wednesday? So yeah, NBA. Apart from that, I think that's about it we got today. So not a lot at all on the data front. So it's going to be headlines bound for us. Anything that pops up, any squawkers, none from the Fed because they're on blackout, obviously. So yeah, we shall call that a day. Have a wonderful day, everybody. Trade well, trade safe. And we will see you tomorrow. Have a good one. Cheers, Kate.
Cheers, guys.